Good morning, dear. Welcome at ICA YouTube channel and all other portals, SSP portal and ICA BOS app, where this videos are running live and also available in running in recorded modes. So send me your presence. Would like to see how many have started attending the live classes now, which is always required. We were at accounting for employee stock option plans, ESOPs. Today we will cover issues in ESOPs, means whatever the important problems or important issues which you have suffered while doing this chapter. And second is we will go for the next chapter, that is buyback of shares and securities, which is a very important chapter from examination point of view. You may see that just attending a one lecture or studying for one day, you are able to get minimum 5 to 10 marks into your exams, and that is with surety. That is a very good thing. If you will see that we are interested to go for 20 marks questions, but that may or may not come into your exams, that is a separate issue. But number of times that happens, there is no question from those chapters. But these two chapters, one is buyback of securities, second is ESOPs. These are the chapters which are normally giving us, rewarding us with one minimum question, and otherwise it may go for the two questions, means 5 to 10 marks weightage of both the chapters are there, and that is a good weightage because this is a sure weightage. Because if you will see the last trend of the exams, you will see we are getting regular questions from these chapters. So comparatively, it is good for all of you. Yeah, good morning to all of you. Pooja, Sonika, Karthik, Rahul, Bendredi, Hitesh, Kesh, Sai, Namarta, Aditi, everyone, Yadu Gondla, everyone, whatever, whomsoever are available, send your presence as much as possible. Good number of students are available on Saturday. This is a good thing because normally students are assuming that Saturday is a holiday, but as classes are running in routine, so we must have to attend these classes. And even you will see on the next Sunday, we will have a session and all will be available, I expect. So you people will have a habit of studying on these holidays also. But if I'll see, my concept is something different. When I was studying, my concept was practically I'm more keen on the important chapters, and the second thing is I'm doing each and every chapter, but I'm more concerned about those which are coming into your exams by checking the exam trend, which is given in the various books like Scanner or etc. Whatever is available in the market. You may see the examination trend there. So accordingly, you may see the weightage of each and every chapter, and what is the latest trend is that you may also from there. This is all self-understanding because I am able to help you in just accounting, and that will be only in few chapters if you will see. But you people, you guys have to go for all the subjects, all the chapters at your own, because different teachers are there, they have their own opinions. I can't change the opinion of other, I can't affect the opinion of others. So I suggest you to one thing, you will have to prepare it by the way according to the latest trend in your exams and the past trends in your exams. You will have to analyze all that. And second thing is you should have to do more and more written practice. But normally what happens, we people are very concerned about this thing that we may read it and understand it. Whenever you are reading anything and trying to understand it, that is not applicable later on, because when you will try to do it, you will not be able to solve the question in the exam. Why? The reason is very simple. You have not done it in written. Written is very important. If you will see, we are going for the written exams. Written exams are such important which have uncomparable weightage. You can't compare it with anyone else. So have a written presentation. And second thing is you must have to go for the thing, means you have to do more and more questions by your hand. And third, next thing is you have to go for the presentation of your questions in the exam. Whenever you're solving questions in your exam, you should have to give better presentation. Whatever presentation you expect from yourself, give more better presentation. Like one thing is, I would like to discuss all these things on Sunday, next Sunday, when there will be a special session. I like to cover all the aspects, whatever are there, in addition to the problems. But general concept I would like to discuss today, that you should have to go for a proper presentation, whatever is given in your module. Like here you may see, which is very important, that here rupees is mentioned with every amount, every, this is a proper mention that these are years, these are stock options. Normally we people doesn't concerned about these things, we normally leave these things, or we are not concerned that this will be an important issue. But you may see, like this is a pro forma. You may see, first of all, what happened, every solution must start from the new page, every solution of a new question. Like question you will get 6 questions into your exams. So what you have to do, start every question from new page. Like question number one from new, second from new, third from, between any two parts of the question. Like there are 3 parts or 4 parts in a question. Like in first question you will get 4 parts. So what you have to do, you have to minimum leave 3 to 4 lines, leave 3 to 4 lines between any two one, between any two parts. Means don't complete part and then start the next one. And your writing should be very good. Writing is very important. Writing should be very good. Then the most important part is, try not to go for cutting. Avoid cutting. Overwriting to allowed ही नहीं है. Don't try overwrite anything. These are to be avoided. Whenever cutting is required, like you have to cut all this, so you have to do like this. If you have to cut this equity, this is the way how you may have to make the cutting. Don't make like this. That is not presentable. This is presentable. So if you have to cut this in full, that's it. More than sufficient. Don't cut it like this. This is not presentable. But overwriting, if you will say, that is not allowed. That is 100% not allowed. So these things must be kept into mind while solving the questions. Remaining, whenever I'll get the time in the next 2 lectures, I would like to cover these things. Also, if possible, we may have a session near the exam, like a personal session, if it is possible. I would like to help you. So basically, these things are important from examination point of view. And whenever we are going into the practical life, then practical knowledge is very important. If you will see what should be your practical knowledge, that is very important. Because without practical knowledge, you are unable to get benefit of anything. So I suggest you to go for the practical trainings also. Practical training means for that you should have to start from the practical accounting of live case studies. You should have the knowledge of tally. You should have the knowledge of GST return filing, GST accounting, stock management, debtor management, creditor management, everything, because that will help you to get benefit in your practical life when you will go into the training, or already if you are going for the training, you will get advantage of that also, because in that case your stipend will be improved, your next level of knowledge you may get, because first level is already covered, then you may go for the next level of knowledge. You should have the understanding how to file income tax returns, logic behind this, everything you should have to know. And for that I suggest you to go for practical trainings. I am providing that. You may also get help of mine, there's no problem. These are available with me also. So I suggest you to go for that. And after doing CA, you need that obviously, because without that you are unable to get benefit. Chalo, let's start with the. I think maximum students have already logged in, so class should be started in a proper way. Illustration number 4 students are saying. Illustration number 4, yes. Read the illustration first, then we will go for its working. He says 460 employees are there, 120 shares to each of the 460 employees. Each grant is conditional on the employee working for Ajanta over the next 3 years. Ajanta has estimated that the fair value of each share option is to allow, and estimate that 25% of the employees will leave during the 3 years period, so forfeit their right to the share option. So this is already planned, or they already expected that out of 460 employees, only 75% will continue. So 345 employees will continue. So we'll have to make provision for 345 employees, not for the all employees 460. So 345 employees, and 120 share option is there, 120. So into 120, and this will be the total provision into amount. This is the number of shares to be given to them. This is the share. This is the employees. Employees into number will become total number of share options we have to give, and to be multiplied with the value, that is 12 rupees. This will be the total amount, and this amount will be created during the period of 3 years, because total period is 3 years. So whatever the amount is there, you have to divide it by 3 to get that how much is to be written off every year. How much is to be written off every year, that you have to calculate. So 460 into 0.75 into 120 into 12 divided by 3. So this will result into 1,65,300, 1,65,600. Is that clear? Everything turns out exactly as expected. So it means for we have to create it for 3 years, and then we will obviously go for the next part. Yeah, this is okay, 100%. So cumulative means this becomes totaled, because we are creating provision every year, so it will be automatically totaled in the next year. I think this is clear. Good morning to everyone. Number of students have sent a good morning, so I am thankful to them that they are sending their presence, so that I must be boosted. ICA given section-wise weightage, it is available on BS website. Exactly, beta. That is good. But that weightage is a provisional weightage. Until and unless you will not go into the exam and check it out that which chapter has rewarded you a question, you will not check it out, then it will be really difficult. Because you must have to check whether buyback is giving question every time or not. Question number is written in between of page. No, that is not required, but question number must be written in this way. Not like this. This is bad. Whenever you have to write question number, it should be given in left side, but there must be some presence that it is given. And whenever you are going for the next question, always write, if there are some lines left, you must have to write PTO, because number of times the examiner confused that whether he has gone for the next chapter or next question or not, or number of times it happens we wrongly leave the वेकेंट पेज इन बिटवीन दैट। गलती से कई बार पेज जुड़ा रह जाता है, छूट जाता है हमसे, तो अगर हमने पीटीओ लिखा होगा तो ऑब्वियसली वो नेक्स्ट पेज के बाद भी चेक करेगा जाके कि इसने यार पीटीओ लिखा है, तो ऑब्वियसली ये करना चाहता था। स्कैनर, आई थिंक आई हैव स्टडीड ऑफ स्कैनर कंपनी ओनली, Suchita Prakashan, I have studied that. Remaining is all up to your choice. Maybe that is available on the market or some other, I doesn't know. Now at time it is available, this I know, but whether other companies are there, I doesn't know, because I belongs to Ludhiana, and obviously you are better living in all different parts of the city of the country, so there may be some difference also, but preferably their presentation is better than anyone else. Which company scanner are do we purchase it from market? Yes, you may purchase it from market, obviously, or you may purchase it online also. Now at time everything is available. This is publicity of someone, but for the benefit of the student, I may guide you. This is Suchita Prakashan. So nothing is publicity. If we can clear the exams this way or that way, it will be always good for everyone. In articleship, this all will be covered. Namartha, in articleship, we are not able to cover practical knowledge, because in 2-3 years, if you will cover only these things, and even then something is left, then there is no use of articleship. Articleship is for the advanced trainings, advanced knowledge, because chartered accountants have only the return filing work. They normally doesn't have accounting work, but accounting work is much more required for practical starting, because whenever we will go into a company, they will appoint you as accounting manager or audit manager. You should have the knowledge of basic accounting. You should have the knowledge of practical accounting, GST accounting, Tally, BC, Mark, every software you should have the knowledge. If you doesn't know you should have the knowledge of SAP, you should have the knowledge of other things. But chartered accountant can give you a limited opportunity, because he may give you the opportunity of only those work, whatever is available with him. जो काम उसके पास है, जो काम उसके पास है ही नहीं, वो आपको कैसे दे देगा? So illustration number 4 was so easy. Good. Issue price not given, therefore we assume that loss is equal to face value. Issue price not given, so therefore exactly better. Good morning to all. So illustration number 5, how to calculate employee compensation expense. Please explain again. Okay, leave it. Come to illustration number 5. So he has given that 8,000 equity shares of 10 each on 1st of October. This we have done yesterday also maybe. Okay. Illustration number 5, how to calculate employee compensation expense. 8,000 equity shares of nominal value of 10 each at rupees 80 when the market price is 170. So loss is 90, which is already given fair value. The vesting period is 4.5 years. Fourth on unvested option lapse on 1st of December. So in yesterday we have discussed in 2010 to 2011 total losses, how to calculate employee compensation expense. That is very simple, beta. 8,000 equity shares are there into 90 is the fair value. It is 7,20,000. Vesting period is 4.5 years. So divided by 4.5, you will get the solution. It is 1,60,000. So this will be the compensation expense to be written off every year. Now what happened? What happened in the first year? We have declared this option on 1st of October. So in the first year, we have only 6 months with us. So we have to write off only 50% of it. That is 1,60,000 into 6 by 12. In the next year, 2011-12, the provision will be for 1,60,000. In the next year, 2012-13, A new thing has happened. Fourth on unvested option lapsed on 1st of December. So it meant for 50% of the options have lapsed. Now, how to get it? That is a good thing. In this case, I already discussed with you. We should have to go for the. Let's have a calculation here. It will be yes. Opening balance. Opening balance is 80,000 in the first year plus 160 in the second year. So total is 2,40,000. How much is required at the end? Minus required closing balance. Closing balance is required for 2.5 years for 4,000 shares, because out of 8,000, 4,000 has lapsed. So only 4,000 shares provision is required. To create 4,000 shares provision, we should have to go for 4,000 into 90 per share. We know it very well. This is 90 per share. This is a provision for 4.5 years. But how much period is expired till now? See, from 1st of October 2010 to 31st of March 2013, it is 2.5 years. Is it clear? Is this clear? From 1st of October, because we have issued this option, we have granted this option on 1st of October, and today we are talking about 1st of December 2012, for which accounting year will close on 31st of March 2013. So I accordingly calculated this for 2.5 years. So this provision is required for 2.5 years. Total provision is for 4.5 years, and we have to keep it for 2.5 years. So this is to be calculated. This is 4,000 into 90 divided by 4.5 into 2.5. It is 2 lakh which is required to be carried forward. So 40,000 is surplus to be reversed, transferred to general reserve. I think this is clear to Aditi and others whomsoever have any doubt in illustration number 4. Please tell me if there is any doubt in this calculation. Waiting for your doubts, beta. We have to reverse 40,000 by transferring to general reserve. No doubt, I assume. Then in the next year, he says there is no problem, because in 13-14, if you will see, three-third options are lapsed on 30th September 2015. So 13-14, there is no issue. 14-15, there is no issue. And we know it very well. Total provision is 1,60,000 for, this is for 8,000 shares. Now we have to retain only 4,000 shares. We have to create provision for 4,000 shares only. So 80,000 will be created in next 2 years. In fourth year and fifth year, in third year and fourth year, 40,000 provision is required only, because 2.5 years have already been passed. Now 3.5 years, now 4.5 years have already been passed. Then exercise period is there. These people have exercised their options. 3,000 have already been purchased and 1,000 vested option lapsed. So This will be automatically the closing balance, whatever it is, which will be transferred to general reserve at the end now. Now, transferring to general reserve will comparatively be very easy because 2 lakh was the opening balance after 2.5 years. In that, 80,000 is added, this one, 80,000 is added, this one. So total is 3,60,000. Out of that, whatever is the loss, we have, that will be 2,70,000 maybe, because 3,000 into 90 will be the amount which will come to you. So remaining 90,000 will be transferred to general reserve at the end. Illustration number 6. In module 1,20,000 is reversed. $80,000, $80,000, 1,60,000 is okay. Beta, it is 40,000 only because what they have done, Rahul have a question that whether we are correct or wrong, because he says that 1,20,000 has been 1,20,000 has been reversed. Beta, they have not reversed 1,20,000. You may see that they have created a provision of 80,000 also. If you are doing two things, one is you are creating a provision, second is you are reversing it. It means for net is to be considered. They have reversed 1,20,000, that is, they have deducted 1,20,000 and added 80,000 as a provision. So net is 40,000 beta, which I have already discussed with you. So there are two options. I have already discussed when I have started this chapter in my previous lecture yesterday, that we may go for the new provision and reverse the provision at the end. That is all up to our option. हम लोग ऐसे भी कर सकते थे कि हम लोग पहले 80,000 की प्रोविजन क्रिएट करते, जो हमने डिस्कस करी अभी कि नेक्स्ट ईयर से 80,000 की होगी, वो हम इस साल में भी क्रिएट कर लेते और टोटल 1,20,000 रिवर्स कर देते. ये हमारी मर्जी पे डिपेंड करता है, क्योंकि ये तो हमारी कैलकुलेशन है. मैंने ओपनिंग बैलेंस बताया 2,40,000 आपका आ गया था, उसमें आपने 80,000 करंट ईयर की प्रोविजन ऐड कर दी. अब रिक्वायर्ड क्या है एट द एंड ऑफ द ईयर? हमें रिक्वायर्ड है 2 लाख ओनली, हमें 2 लाख चाहिए. तो हम लोग क्या करेंगे इस केस में? 1,20,000 रिवर्स करेंगे. तो अभी मैंने क्या किया था, मैंने 40,000 रिवर्स किया बिकॉज मैंने ये 80,000 की प्रोविजन क्रिएट ही नहीं करी. तो आपकी मर्जी है, दोनों ऑप्शंस ठीक है, मुझे कोई प्रॉब्लम नहीं है, जैसे आपको इजी लगता है वैसे कर सकते हैं. When the fair value of shares and the issue price both are given, then what to consider to calculate employee compensation? Fair value is to be considered for the purpose of calculation of employee compensation expense, beta. Exactly, very good, beta. Namarta has done very good. That is really good. Illustration number 6th and 7th. Now we have to come. Yes. Illustration number 6 is good illustration. He says Choice Limited grant 100 stock options to each of its employees. 100 stock options to each of its 1,000 employees on 1st of April for 20,000. Depending upon the employees, at the vesting of the options, option would be exercised within a year when it is vested. Obviously, vesting period is also given to you. Exercise period is 1 year for 20, depending upon the employees at the time of vesting of option. Okay. So the market price of the share is 50 each. These options will vest at the end of year 1. If the earning of Choice Limited means here vesting period is conditional. it will be 1 year. These options will vest at the end of year one. If the earning of choice limited is 16%, if our earning will be 16%, then vesting period will be for 1 year. Or if it is not 16%, then we have to go for the second year also and check it out how much is the average earning. Average earning means profit of earning of year one plus earning of year two divided by two. So that should be minimum 13%. If this is achieved, obviously he says we will allow you to get the benefit, or it will vest at the end of third year if the average earning of 3 years will be 10%. So if it is not beneficial in the first year, go for the second year. If it is not possible in the second year, go for third year. Beta. So fifth on unvested option lapsed. Fourth on unvested option lapsed on this date. And finally, 35 unvested option lapsed on this date. Consider fair value per option is 30 rupees. So this is a question given to you that following were the earning of choice limited in the last 3 years. So it is up to the employees that whenever they are interested to apply for their options. Now, at the end of first year, your earning is 14%, but it should be 16%. So it is not good for the health of the, it is not allowed that they will have to go for the benefit. Then next year it is 14 plus 10 divided by 2. It is 12%, but we require 13%. So this is also not allowed. Third year it is 16, it is 14. It is 14 plus 10 plus 7 divided by 3. So it will be 10.33. It should be more than 10%. So third year is the right period when they will be given an option that they may, after third year, they will be given an option that they may apply for the ESOPs. Otherwise, they will not be allowed to get ESOPs. If they will not be able to earn 16% in first year, or average of 2 years as 13%, or average of 3 years as 10%. Only when this condition will be satisfied first, after first year, they will be given an option. So this is all understanding. This is all the terms and conditions which has been given that how this benefit will be given to the shareholders. Now, at the end of third year, when vesting period is over, he says 850 employees will apply for the option. Remaining 150 employees will not apply for the options. Total 1,000 employees are there. Then some options are lapsed also. We have granted this on 1st of April 2011. Fifth on option lapsed on 31st of March 2012. That is at the end of first year. Fourth on unvested option lapsed on 31st of, that is at the end of second year. And 35 unvested option lapsed on 31st of March 2014. So see how much options are to be given. ESOPs 1,000 into 100. This is 100 stock options to be given to 1,000 employees. So 1 lakh stock options are to be given at the value of rupees 30 per option. So see, 30 lakh is the amount of provision required if you see the total amount. So this is the detail. Now let's come to the solution. Working note is very important in this case. See, we have 3 years with us, and we doesn't know that something is important in this question, which is to be kept into mind. Here you must have to see that when he says that if the earning of year one, if the earning of year one is 16%, then we will assume that the vesting period is over. एक बार मैं हिंदी में क्वेश्चन को समझाता हूँ. I would like to explain this question in Hindi also. इस क्वेश्चन में हुआ क्या है कि इस क्वेश्चन में ना आपको वेस्टिंग पीरियड एग्जैक्ट नहीं दिया गया. वो कह रहा है कि फर्स्ट ईयर के एंड में वेस्टिंग पीरियड ओवर हो जाएगा. मींस वेस्टिंग पीरियड सिर्फ 1 साल का होगा अगर प्रॉफिट आपका जो आता है वो 16% आता है. तो एट द एंड, तो उस केस में जो सारा लॉस है, लॉस कितना है आपका 1 लाख इंटू 30, दैट इज 30 लैक्स. तो लॉस को राइट ऑफ करने की जरूरत नहीं पड़ेगी, बिकॉज इन दैट केस अगर हमारा ये कंडीशन पूरी हो जाती तो हम तो उनको ये बेनिफिट दे ही देंगे. तो जितने लोग अप्लाई करेंगे, जितने लोग लेंगे, हम उसको किताबों में डाल लेते हैं. बिकॉज अगर सेम ईयर में सब कुछ हो जाए तो हम ऐसा कुछ नहीं करते कि हमें पहले प्रोविजन क्रिएट करनी है फिर उसे लॉस को राइट ऑफ करना है. तो ऐसा कुछ नहीं होता उस केस में, आप सभी को पता है. दूसरा है जाता है कि अगर वो कह रहे हैं कि फर्स्ट ईयर में 16% प्रॉफिट नहीं होता तो हमें ये जो पीरियड है ऐसे मिनिमम 2 इयर्स मानना पड़ेगा मिनिमम. क्योंकि फिर हम सोचेंगे कि अगर नेक्स्ट ईयर में जो उसकी अर्निंग है, एवरेज अर्निंग, वो 13% हो जाएगी, तो फिर वेस्टिंग पीरियड 2 इयर्स रहेगा. फर्स्ट ईयर तो आपका ईयर 1 हो गया और ईयर 2 आपका सेकंड ईयर हो गया. मींस अगर ये यहाँ पर 13% हो जाए, बट मुझे ड्रीम नहीं आ जाएगा पहले, आई डजंट नो कि ऐसा होगा कि नहीं होगा. तो पहले तो मैं ये सोचूंगा कि मैं फर्स्ट ईयर में ही सारा कुछ एडजस्ट कर लूंगा, मुझे किसी प्रोविजन की रिक्वायरमेंट नहीं है. लेकिन जब फर्स्ट ईयर का मेरा रिजल्ट आया 31 मार्च 2012 को, तो मैंने देखा मेरा रिजल्ट तो 14% है. तो मेरा तो 16% की कंडीशन ही सेटिस्फाई नहीं हुई. तो मुझे जो प्रोविजनिंग करनी है, अब ये मान के करनी है कि 1 साल में तो कंडीशन सेटिस्फाई नहीं हुई, 2 साल में हो जाएगी. तो टोटल लॉस है जो मेरा 30 लाख का, जिसे मैं कह रहा हूं, ये मुझे 2 इयर्स में राइट ऑफ करना है. ऐसा मैं मान के चल रहा हूं, क्योंकि मैं ये मानता हूं कि नेक्स्ट ईयर अच्छा रहेगा और मैं एवरेज अर्निंग 13% अर्न कर लूंगा. लेकिन उसके बाद जब सेकेंड ईयर कंप्लीट होगा, जब मैं सेकेंड ईयर की प्रोविजनिंग करने लगूंगा, तो मैं देखूंगा अभी तो वेस्टिंग पीरियड ओवर ही नहीं हुआ. क्योंकि प्रॉब्लम क्या आई कि मैं इस बार भी कंडीशन पूरी नहीं कर पाया. अब मुझे थर्ड ईयर की वेट करनी पड़ेगी. अब जो मेरा टोटल लॉस है वो मैं 2 इयर्स में राइट ऑफ नहीं करूंगा. जो मैं पहले सोच रहा था 2 इयर्स में राइट ऑफ करूंगा, अब मैं उसे कितने सालों में राइट ऑफ करूंगा, 3 इयर्स में. बट थर्ड ईयर क्योंकि द लास्ट ईयर है, उसके बाद तो रहेगा ही नहीं टाइम हमारे पास. तो हम कैलकुलेशन इस तरह से ना करके इंस्टेड ये भी कर सकते हैं कि बैलेंस जितना हमारा लॉस है वो सारे का सारा हम थर्ड ईयर में राइट ऑफ कर दें. क्योंकि हमें क्या जरूरत है उसको कैरी फॉरवर्ड, उसको कैलकुलेट करने की. हम तो सीधा ही कैलकुलेट कर लेंगे प्लस माइनस करके. सो दैट वी मे डू. अब फर्स्ट ईयर में क्या हुआ, फर्स्ट ईयर में आपके जो 5,000 शेयर्स हैं वो अनवेस्टेड ऑप्शंस लैप्स हो गई. तो 5,000 लैप्स होगी, टोटल शेयर्स कितने थे 1 लाख. तो एट द एंड ऑफ फर्स्ट ईयर मेरे पास 95,000 शेयर्स रह गए. जब मैं सेकेंड ईयर में गया 4,000 और लैप्स हो गई. अब देखो ना, 4,000 अनवेस्टेड ऑप्शन लैप्स, अब 91,000 रह गए. जब मैं थर्ड ईयर में गया तो मेरी कितनी रहेगी, 3,500 और लैप्स हो गए, 87,500 रहेगी ऑप्शन. मीन ऑप्शन भी कम होती जा रही हैं जैसे जैसे मैं आगे बढ़ रहा हूं. तो अकॉर्डिंगली प्रोविजनिंग पे इफेक्ट पड़ेगा. यहां तक सभी को क्लियर है, आई एज्यूम्स. ये मैंने आप सभी को समझा दिया. आउट ऑफ 1 लाख 5,000 ऑप्शंस लैप्स्ड. ड्यू टू दैट रीजन इट इज 1 lakh minus 5,000. So this is after deducting those options which are lapsed. Here 4,000 options are lapsed out of this 95,000. Out of 95, 1,000, 3,500 are more lapsed. How much is the loss? Loss is at the rate of 30. That is fair value is 30. So it is to be multiplied with 30. And this amount resulted. Now, at the end of first year, we will have to assume that this loss will be written off in 2 years, because I already discussed with you that he says vesting period is 1 year, means there is no need of writing of loss. We will instead do one thing. We will instead do one thing. We will pass direct entry. But this hasn't happened, because the profit rate is 14% instead of 16%. So this is very much clear at the end of first year that we are unable to issue these options at the end of first year. We will have to wait for the second year also. So I assume that the total loss will be written off within 2 years, because I assume that the vesting period will be 2 years. Because we always go for the optimistic approach, and the optimistic approach is very much clear that we'll have to assume that it will be done in the next year. So 2 years is the period we expected. Due to that, then we have written off in 2 years. So 14 lakh 25 is written off. So this provision is carried forward to the next year. So in the next year, total amount is 27 lakh 30,000 total loss, because here we assume that the total loss is 28 lakh 50,000. But in the next year, as options have more options have left, so total provision required is not 28 lakh 50,000. Instead, it is 27 lakh 30,000, which is to be written off within 3 years now, because this is very much clear. We are unable to satisfy the condition within 2 years. So vesting period has again increased to 3 years. So it is increased by 1 more year. Now this loss is to be written off within 3 years. But in this case, total loss to be written off till now will be 2 out of 3. Reason being, first year has already been passed. This is second year. So we have to write off proportionately for 2 years. So it has done 2/3. So this amount is to be written off up to the end of second year. Already we have written off 14 lakh 21,500 in the first year. Remaining is to be written off in the second year. And in the third year, total loss 26 lakh 25,000, because vesting period is completed. Now total loss must be written off in full. Total loss is 26 lakh 25,000. Out of which already we have written off 18 lakh 20,000, because 14 lakh 20,000 was 25,000 was written off in the first year. 3 lakh 95,000 was written off in the second year. So total, how much is written off? 18 lakh 20,000. Balance is to be written off in third year. Siddharth, bad or good? Bad or increased? Normal accounting and advanced accounting seem to be better. Good comment. Last year is considered for exercise. Exactly, beta. I think it is clear to everyone. Having any doubt, I would like to explain it once again. See, you should be very much clear in this concept. Any doubt to anyone? Tell me any doubt, or is that clear? Total options is clear to everyone. 1,000 into 100, that is 1 lakh. So I think it is clear to everyone. But I would like to suggest you one thing. Now you will have to note it down in your copies, which is very much important. Note it down in your copy, because it is not for the purpose of seeing, it is for the purpose of doing. So let's do it. So this is year 1, year 2, year 3. Total options are 1 lakh. So outstanding options, that is 1 lakh minus 5,000, 95,000 minus 4,000. Write it down in this way because today it is clear, but when you will do it again for your exams, it will not be clear. Because it is somehow typical. So I am doing it for you, for your copies. Please note it in your copies. Now, assumption of vesting period. It's 1 year if 16% is the rate, 2 years if 13%, and 3 years if 10%. Zoom size is to be reduced or increased better. Okay. No problem, I will do. Shriram, I will see that what is the column. So 3 years if 10%. Now, actually what happened? Actually it is actual at the end. So actual at the end, what we will assume? It is 2 years as above condition not satisfied. In this case, it is 3 years as above condition not satisfied. It is 3 years as above condition satisfied. So 2 years, 3 years, and accordingly amount to be written off. So this is 95,000 at the rate of 30 in 2 years. This is 91,000 into 30 into 2 by 3 years, because this is till date 2 years are expired and total is 3 years. So this is 87,500 into 30. Full amount is to be written off. Amount to be written off till date. So you have to calculate this amount. This should be 14,25,000. Then this should be 18,20,000. 18,20,000. 26,25,000. So this amount is to be written off till date. Now, actual written off up to last year, zero, because this is the first year, so nothing has been written off in the previous years. 14,25,000. So this has been written off in this year. In current year, it is 14,25,000. So obviously this amount is to be shown here by this way or that way, whatever you are interested to do. So remaining amount is to be written off, that is 3,95,000. So here total amount to be written off 26,25,000, out of which 18,20,000 is written off till now. Take it from here. Or total it and enter here. Enter here. If we are unable to satisfy this condition even in third year, if we are unable to satisfy this condition even in third year, then we will reverse the complete provision in third year itself. We will not go for the fourth year. Instead, if we are unable to satisfy this condition in the third year, then we will reverse this 18,20,000, whatever is created up to second year, because in third year we are very much clear that we are unable to satisfy the condition. So instead of creating additional provision of 8,05,000, we will write off 18,20,000 if in case we are unable to satisfy the condition third year also. Whether screen is not visible to other students also. A student is asking, telling me again and again that the screen is not visible in full. So whether this happens with other students also, I think this is not possible because screen is already set in this way that it will be visible to everyone. So please check it yourself and tell me. Maybe Shriram, it will be okay. Second year column, it is visible. Second year column, it is visible. Okay, good. To reduce the screen size, I should have to do this. Ashok, students are saying that the screen is not visible in full. Please check. Okay, no? Yeah. Students, I have set it for you accordingly. Please note it down so that I can proceed accordingly. I'm setting it just a moment. Once you may note it down, then I'll set it accordingly. If it is not possible, then I'll see. All have noted down. See, some reason we are not seeing here three numbers are from your working. The right side is not visible. Okay, I have done it for your purpose. Please note it down. Then I'll see that how it will, how this problem can be sorted. Noted. सर ये आपकी तरफ से प्रॉब्लम है, अशोक जी ठीक करिए इसको। आपका ना वहां से कोई दिक्कत है। ये राइट साइड ना मेरी कट रही है बोर्ड की, जो मेरी स्क्रीन आ रही है ना उसकी पूरी आपके पास नहीं आ रही। आप सेटिंग करिए प्लीज अशोक जी। अब मैं देखो ये पकड़ के करूंगा ना इसको, मान लो मैं तो ऑलरेडी कर चुका हूँ इसको, मैंने जूम भी कम कर दिया, सब कुछ कर दिया, ये ना आपकी तरफ से वहां से कोई दिक्कत आ रही है। आप ना अपने ओबीएस में सेटिंग करो। हाँ, वहां से प्रॉब्लम मैंने देख लिया, मैंने सारा चेक कर लिया है, क्योंकि मैं तो ये रोज टेलीकास्ट करता हूँ। वो मेरी स्क्रीन पूरी उठाने को तैयार ही नहीं है, मैं जो मर्जी कर लूँ। राइट साइड से आपकी तरफ से कट रहा है। आपके पास जो मेरी इनपुट आ रही है ना, उसमें थोड़ी सी सेटिंग करनी पड़ेगी आपको। ब्रेक ले लेते हैं, अगर आपको ठीक लगे तो ब्रेक के बाद कर लेते हैं, ब्रेक में आप सेट कर लो चाहे। ब्रेक जल्दी ले लेते हैं, मुझे लगता है सेटिंग करने में टाइम लगेगा आपको। लग जाएंगे। हाँ ब्रेक डाल देते हैं बेटा, फिर आफ्टर द ब्रेक वी विल कंटिन्यू, सो दैट थोड़ी सेटिंग भी ठीक हो जाएगी और आप लोगों के लिए भी इजी रहेगा। सो हैव अ ब्रेक फॉर 10 मिनट्स, so 10 to 15 minutes, देन वी विल कम बैक। So welcome back after the break. Now everything is clear till now. Starting with illustration number 7. Starting with illustration number 7. At the beginning of year 1, enterprise grant 10th on stock option to a senior executive. So this is a senior executive to whom an option is given that he may get 10th on shares of our company. But for that condition is there, and the condition is very simple, that he will have to remain in our employment, in our job, in our company until the end of year 3. So it is a condition given here. Exercise price is 40 per share. So option is granted 10th on share options, but condition is there. Exercise price is 40, price will drop to 30 if earning will increase at least an average of 10% per year over the 3-year period. So this is clear कि we are giving here a conditional conditional benefit. In that case, price will drop to 30. On the grant date, the enterprise estimated fair value on the grant date, because we are considering only on grant date first of all. So exercise price of 30, fair value is 16 per option. So this is fair value. If the exercise price is 40, then the stock option have a fair value of 12 per option. So year 1 earning increased by 12%. So we already mentioned that the exercise price will drop to 30 if the earning increase at least an average of 10% per year over the 3-year period. But here the vesting period is 3 years. We know it very well. So all things means shares are to be given only at the end of 3 years. But we have to create the provisions. To create the provision, it is very much important that we should have to. Before that, I would like to discuss with you one thing, because in this question, whatever we are discussing, before that, I would like to give one more benefit to you. I think you people doesn't have the quality of, you people doesn't see the quality of the video, whatever you are seeing. But without quality, you are unable to get the benefit. So I suggest you to check your quality also. So how to check the quality? For that purpose, you will have to on YouTube, how to see the videos. I would like to suggest you, beta. When you open YouTube, I see a YouTube channel. And taking live classes or recorded classes, always do one thing. I would like to show you how it is to be done. Go to your live class. Yes. This class is running. The people are already seeing this class. Do one thing. This option is available in your mobile also. You may have to change its video quality by going into the settings. This is given on the right side of your uh, this is given on the right side of your mobile also. Don't go for the automatic quality. Instead, you should have to go for the 720 pixels quality. When you will select this, your quality will be increased to too much level, at a higher level. Your quality will be increased to a good level. So 720 pixels should be the quality. Only then it will be beneficial, because number of times you are unable to see the video. So that is not beneficial at all. I think this is clear, that you have to adjust the quality according to your requirement. So on ICE app also, I have seen that on ICE app, the video is very small and you are unable to see it in a proper way. It is better to see it on SSP portal if it is available. Either it is available on SSP portal also. You may better see these videos or study it on laptop. That is always good. On computer, on desktop, not on the mobiles, because mobile is not good for studying. If it is available with you, it is always better. You should have to go for laptop or computer. If computer or laptop is not available to you, then minimum see it on IC app, then click there and go to YouTube, because on YouTube you will have a complete view. Because I have seen that when IC app is made in landscape, then it is not seen in proper way. So there may be such problem that I have observed. I would like to discuss with you. So hence I have taken your 2 minutes. So if it is available on SSP portal, it is always good to SSP portal is easily accessible on your laptop or computer, and in that case, quality will be unimaginary. Always try to go for the settings. Whenever you are seeing video on any channel, always go into the, because when it is uploaded, I have seen today, it has been uploaded at only 144 pixels. That is very low quality, and at that quality, video is not visible. Nothing is visible. And I would like to be thankful to two students who have Namarta, and one more student was there. Maybe Aditi or someone was there, Siddharth, etc. So whomsoever was there, that is very good. They have observed this thing, that they are unable to see it properly. So whenever you have suffer any doubt, any problem, you must have to discuss with us. It will be always helpful. So here in this question, we are always expecting that the benefit will be observed. So here vesting period is looks 3 year. Vesting period is 3 years. But when we have to write off the when we have to write it off, the loss to be written off, then we assume that everything will go normal, because at the end of first year we are able to achieve 12% and we are expecting to achieve only 10%. So it is beneficial. Hence, at the end of first year, whatever loss we are expecting, that is 10,000 into exercise price is 40, it will drop to 30 if the earning increase by at least 10%, and the loss will be 16 per share. So at the end of first year, you will calculate it 10,000 into 16, because we are expecting it divided by 3. At the end of second year, earning increased by 13%. So we are expecting that the same thing will happen in future also. So accordingly, we have written it off. Now, during year third, the earning of the enterprise increased by only 3%. But in this case, provision has already been made. So there is no chance of creating any provision. Instead, we have to solve the question. The executive completes 3 years service and therefore satisfy the service condition. Because the earning target was not achieved, stock option has an excess price of 40 rupees per share. You are required to calculate the amount to be charged to P&L account. So comparatively simple, nothing typical if you will see better. At the end of first year, we assume that the loss is 16, hence written off accordingly 1 by 3. And then next year, we have assumed it will be written off 2 by 3. But in the third year, it is very much clear that the target is not going to be achieved. So the loss of 12 will be written off. And already we have written off this much amount, it will be deducted. That's it. I think this is clear. Queries are to be commented on BOS app, it is always good, or SSP portal, it is always good. So due to that reason, Pandava, I have recommended you to go for SSP portal, that is better. You should have to comment your queries from laptop, computer, it is always good. So I suggest you to go for laptop or computers. Nowadays, computer is much more, you may say, cheaper than your mobiles. If you are unable to purchase computer or laptop because you doesn't have funds, then I would like to say you should have to purchase mobile. Instead, you should have to purchase laptop or computer because computer costs you approximately 20,000. Nowadays, if you will go into the market and ask them, I am interested to get i3 or i5, which is second hand, then those second hand are available approximately at 20,000 rupees. And we are purchasing mobiles normally at 15 to 20,000. So instead of purchasing you mobile, you may go for the laptop or computer. And even you may purchase computers on installment nowadays. If we are studying hard, then we should have the computer with us. Let's go. So I think this chapter is completed. Any query in this chapter, please tell me. Now do one thing. You will have to do some extra questions also for this chapter by way of questions from your 10-year or scanner. I would like to also show you those questions. So better you may check it out from your ICI website because number of questions are given there. You may better see it from there. Here I have not downloaded it because that is given in some other form which is really difficult to understand. So better है कि आप लोग एक बार अपना ICI में जाके या कहीं ना कहीं से स्कैनर परचेज करके वहां से जो एक्स्ट्रा क्वेश्चन है वो सारे करें because practice makes a man perfect and I suggest you to do more and more practice. Theoretical question may also come from this chapter, but I would like to suggest you to see scanner once. See your previous questions. That will more help to that will give create more help for you. उससे ज़्यादा help मिलेगी. Okay, so let's go for the next chapter. So the next chapter is buyback of securities and equity shares with differential rights. Again, it is a very important chapter from examination point of view because it will normally cover 10 marks question into your exam. So weightage of this chapter is good. Meaning is very much clear to everyone. Buyback of securities and equity shares. So when we are buying back our equity shares with differential rights, means which have different type of rights, or securities, then how to treat that? The concept is given here. What is the objective, meaning of buyback, and their accounting treatment. Concept of equity shares with differential rights, that we have to understand. Provisions of Companies Act which are applicable on buyback of shares and securities, and difference between two types of share capital and their differing voting rights. So these are the four basic concepts which you have to cover in this chapter. What meant for buyback of shares, that has been given, overview is given, which is very good, which will be helpful to for you in studying, because that has been mentioned specifically in Companies Act 2013. So we will go accordingly. In Companies Act 2013, the buyback of shares can be made out of. So what meant for the buyback, that I have already mentioned you, that we have to buy back our shares. So that can be done in detail, that when it is buyback, whether it, but it has been clearly mentioned that it will be made from free reserve or the security premium or the proceed of any shares. So it looks like that we are going to do just like a chapter which is redemption of preference shares, as we have done in CA Foundation. In CA Foundation, you have done a chapter redemption of preference shares. It is looking like similar. It may be done in your BCom also. So those who haven't done BCom or those who haven't done it in CA Foundation, there's no problem at all, because we will start it from the scratch and try to understand each and everything about this chapter. So buyback of equity shares in any financial share shall not exceed 25% of its total paid up capital in that financial year. So if your capital is 1 crore, then we can't buy back more than 25 lakh of that, because we can't buy back to more than 25%. So maximum amount, maximum availability is 25%. There shall be minimum gap of 1 year, means in a particular year we can go for only one buyback. So gap of 1 year is required between any two buybacks. Ratio of debt owned by the company is not more than twice. This is after buyback. Debt equity ratio must be 2:1. So that we will discuss, everything we will discuss in detail. Don't worry. I'm just giving you an overview. Equity share with differential right, what it meant for. Differential means they have a different type of rights. So difference is specifically in terms of giving a superior dividend, means dividend rate which is to be given to them will be higher than the dividend given to others. Superior voting rights, diluted voting rights to a class of equity shareholders, means we can share equity shareholder in class wise also. That this is a class of this equity share, this is a class of this equity share. Preference shares are not issued with differential right, it is only with equity share which are issued. So it meant for that if we are issuing equity share in routine, then it is a normal equity share. But we are interested to issue those equity shares which will be given more benefit, then they will be named as equity share with differential rights. This is the name of the equity shares. So their features will be written with them, and accordingly we will use them. This chapter is not group 1. Okay, redemption of preference shares in group 1 or not? Namarta is saying maybe this is in group 1 also. So whether redemption of preference share is in group 1 also? Means they will be given some different type of right. So due to that reason, they are named as differential. Superior voting rights, superior dividends, not less voting rights, superior voting rights, higher than others. So let's try to understand step by step, beta. What meant for buyback of securities? So it means purchasing own shares by a company. Not securities doesn't mean for debenture. Let it be very much clear. We are not going to discuss about the debenture. Securities meant for shares. So buyback of shares means purchasing of its own shares by a company. When shares are bought back, means we are going to purchase back our own shares. Now, when we are interested to, when shares are bought back by a company, they have to be cancelled by the company. Company can't purchase it as an investment. Company can't purchase it as an investment. A company cannot buy its own share for the purpose of investment. Whatever I am reading for you, you may do one thing. You should have a highlighter with you. Highlight it so that you can, whenever you will review that, whenever that chapter is to be revised, either at your home today or near to your exams, do one thing. You need not to read each and every line of the theory. It is always better that some points of theory are very important, which I am reading for you. So you may underline those or you may highlight those. See, important point is a company cannot buy back its own shares for the purpose of investment. But one more thing is important. If you are interested to buy back your own shares, what we have to do? In this case, he says, assume we have issued 1 lakh equity shares. So if we are interested, we may get back our shares. This was not allowed before 2000, about 20, 25 years back. It was not allowed. It was started when I have given the exams approximately in 2001 or 2002. It was there when this provision has come into this. Because if you are buying back your equity shares, that means for you are going to pay back your original capital, and original capital cannot be paid back. Earlier, this was a concept that this is not allowed, but due to the reason of pressure of the companies or the requirement as per the industry, this has been allowed. So this has been allowed approximately in 2001 or 2002, according to my opinion. Or we may check it out from the company law also. Before that, it was not allowed. So that meant for buying back our own equity shares. So if we are buying back our own equity shares out of 1 lakh, we are going to buy back 25,000 equity shares. It doesn't mean for we are making investment in those, because when we are buying back our debentures, then it may be an investment. It may be kept as an investment in the balance sheet. But buying back equity share doesn't mean for investment and can never be shown as an investment in the balance sheet. A Limited cannot show in its asset side investment in shares of A Limited. It is not allowed. If we have buyback, we must have to cancel it. It is mandatory. Now, second condition is if a company is having sufficient cash, only then they may decide to buy back its own shares. If a company doesn't have cash for buyback, they cannot go for buyback of equity shares. So it is also mandatory. They must have to arrange cash, means you must have a liquid cash available with you. The following may be the objective. Why this is done? What is the objective behind this? Let it be clear. First, first is we are interested to, like earlier, we have 1 lakh shares. If we are earning 1 crore, then 1 crore is divided to 1 lakh. 1 crore is divided by 1 lakh. And we are paying them 100 rupees per share as dividend. But if we'll reduce it to 90,000, obviously 1 crore will be divided by 90,000 shares. Hence, our earning will increase. How much your earning will increase? Your earning will increase by 111.11. So your earning will increase. So this is the first reason why buyback is made. We are interested to reduce the number of shares so that our EPS, earning per share, is to be increased. If there is no dilution in company's earning, as the buyback of share means, we must have to see that if we will buy back our shares, then company's earning must not reduce. If it happens that due to the reason of buyback, company's earning has also reduced, then this target cannot be achieved. To increase promoters' holding as the share which are bought back are cancelled. Promoters means those who have started the company. Number of times it happened that out of 1 lakh shares, 40,000 shares are kept by the promoters and 60,000 by the public. Now promoters are interested to increase their holding. So what they will do? They will buy back the shares and cancel that. They are interested to make their holding more than 50%. So what they have done? They have buy back 11,000 shares from the market. Obviously, when they will buy back or to 20,000, you must say 20,000 shares from the market, they have reduced the holding of public from 60,000 to 40,000. 60,000 minus 20,000. So the holding of public will become 40,000. Promoters holding is only 40,000. So now they will be equivalent. Or they may do that. They have purchased buyback 25,000. So 60,000 minus 25,000. So it will left 35,000. Now public's holding is only 35,000, whereas the holding of your promoters will be 40,000, which is already there. So their holding has been increased. That is a target which has been achieved in this case. Number of times it happened that some companies or some people are interested to take over our company, and they are doing that by way of purchasing our shares more and more from the market. So promoters have checked this thing, like in the previous example I have discussed. They have a doubt that someone may hostile their company, someone may take over the company. So to save that, they may purchase back their shares to support the share price on the stock exchange when the share price in the opinion is less than its worth. So number of shares are more in the market due to that reason, and the market is depressed, like in case of COVID or like in case of the war which is running. The companies now purchase back their share if they have funds, so that the price, because demand supply gap is there, just like in economics. If number of shares will be less, obviously demand is more, then price will increase. Or we have surplus cash for the shareholder and the company doesn't need it in the business, or they may use it. So this is the basic target why this is done. Cash means cash, bank, or even by sale of or by investment also. That is also cash, cash, bank, or readily saleable investments. Shriram has asked what means for cash. Cash means for cash and cash equivalents, all. Next thing is from where we have to arrange these funds. If you have already done redemption of preference shares, then it is very easy for you, because this chapter will be comparatively easy in case you have already done redemption of preference shares, because there you have already done that. This is to be done in two ways. One is when we are going to redeem our equity shares, like we are interested to redeem 1 lakh equity shares, then what do we have to do? For 1 lakh equity shares of rupees 50 each, you will have to arrange 50 lakh rupees by way of cash and cash equivalent. We know it very well. But simultaneously, we will have to create CRR for that, or we have to make fresh issue for that, so that our balance sheet must not be affected. Our credit side of liability side must not be affected by that. So accordingly, an amount, because we assumes that it must be done from the revenue reserves. If we are interested to, yes, if we are going to make CRR of 50 lakh rupees, sorry, if we are interested to buy back 50 lakh worth of the equity shares, then in addition to the cash and cash equivalent, you must have to show that we are not going to use the funds of debenture holders or loans for the purpose of buying back our shares. We are not going to reduce or affect our capital. Instead, what we are going to do is either we are transferring our revenue reserves, means profits, revenue reserves. So we have earned a good amount of profit. We have a free reserves worth rupees 1 crores. Now, to whom this profit belongs? Whatever revenue reserves are lying with us, this belongs to equity shareholders. We all know. Because what happens, a company have earned a profit of 1 crore, profit after tax. Now, this is after making payment of interest. Interest is already paid. Then we are paying dividend to preference shareholders. Assume 20 lakh is given to them, 80 lakh is left. To whom it belongs, beta? ये किसका होता है? This is profit available for equity shareholders. What we are saying? But company has not declared any dividend. So this 80 lakh will go to balance sheet by the name of free reserve, by the name of general reserve. We all know that whatever profit is available with us at the end, that belongs to equity shareholders, but we haven't given to them. हमारे पास hostile means कोई, जैसे चलो मैं बताता हूँ, जैसे हमारे पास क्या है कि अब देना तो इक्विटी शेयर होल्डर्स को था 80 लाख रुपए, जो आपके पास 80 लाख रुपए बच गया था, बट आपने दिया नहीं उनको। वो 80 लाख रुपए आपने बैलेंस शीट में अपने रख लिया, डिविडेंड डिक्लेयर ही नहीं किया आपने। जबकि प्रैक्टिकली whatever is left with us that belongs to equity shareholders and this must be given to them, but we haven't given them, हमने दिया नहीं उनको। सो यही पैसा हमारे पास पड़ा हुआ है, इसी पैसे को यूज करके हम लोग चाहते हैं कि हम अपनी बैलेंस शीट में हम अपनी कैपिटल रिडक्शन नहीं कर रहे, वी आर नॉट गोइंग टू रिड्यूस अवर कैपिटल। इंस्टेड व्हाट वी आर डूइंग, ये लोगों ने जो इतना पैसा कमाया है, जो ये प्रॉफिट है हमारा, जिसको हम अर्निंग अवेलेबल फॉर इक्विटी शेयर होल्डर्स कहते हैं, जिसको हम जनरल रिजर्व में रख के बैठे हैं, ये जो पैसा है इसको हम चाहते हैं कि अपने इक्विटी शेयर होल्डर्स को दे दिया जाए ताकि उनको बेनिफिट मिल जाए, नॉट बाय वे ऑफ डिविडेंड। इंस्टेड हम चाहते हैं कि उनकी कैपिटल ही वापस कर दी जाए। तो अगर उनकी कैपिटल वापस करेंगे तो कैसे वापस हो जाएगी? हमने 50 लाख रुपीज देने हैं, तो ये जो हमारे पास 80 लाख रुपीज पड़ा है इसको यूज करके हम 50 लाख दे देंगे। तो अगर हम 80 में से 50 देना चाहते हैं तो व्हाट वी हैव टू डू, हमें उसे डेड करना पड़ेगा। अभी इस टाइम पे जो हमारे पास जनरल रिजर्व पड़ा है वो 50 लाख 80 लाख का पड़ा है। इसमें से हम चाहते हैं कि हम लोग 50 लाख रुपीज किसको दे दें? इक्विटी शेयर होल्डर्स के नाम पे ट्रांसफर कर दें। तो कैश नहीं दे रहे। देखो बैलेंस शीट में दो चीजें होती हैं, आप सभी को पता है। बैलेंस शीट में एक एसेट साइड होती है, एक लाइबिलिटी साइड होती है, एंड बोथ आर ऑलवेज इक्वल। व्हाई? अब मैं कहता हूं कि मैंने एक लोन लिया 10 लाख का, तो लोन इधर आएगा लेफ्ट साइड में, और राइट साइड में क्या आएगा? जो मैंने कैश लिया उसका। तो 10 लाख रुपीज कैश भी तो मेरे पास आया, दोनों तरफ आता है ना। मैंने एक एसेट परचेज कर लिया, जस्ट मोमेंट। मैंने एक एसेट परचेज कर लिया, तो क्या होता है बैलेंस शीट में? बैलेंस शीट में आपके एसेट साइड में वो एसेट शो हो जाता है। मैंने एसेट लिया क्रेडिट पे, उधार पे लिया, तो मेरा 10 लाख का मेरा एसेट आ गया। साइमल्टेनियसली एक क्रेडिटर मेरी बुक्स में अपेयर हो जाएगा 10 लाख रुपीज का। तो बैलेंस शीट में या अकाउंटिंग में हर ट्रांजेक्शन के डबल इफेक्ट होते हैं। इसी तरह से अगर आप कह रहे हो कि हम अपने इक्विटी शेयर होल्डर्स को पैसे वापस कर देते हैं, तो इक्विटी शेयर होल्डर्स को पैसे वापस करने हैं आपने 50 लाख रुपीज। इसको खत्म करने के लिए आपको एक तो कैश चाहिए 50 लाख रुपए का। साइमल्टेनियसली आपको ये प्रूव करना पड़ेगा कि ये 50 लाख रुपए मेरे पास रिजर्व्स के रूप में पड़ा है, ना कि मैं अपनी डिवेंचर्स या लोन्स या किसी और पर्सन से किसी और की जो अमाउंट है वो लेके दे रहा हूँ। बिजनेस पे कोई इफेक्ट नहीं पड़ेगा, ये हम शो करेंगे। हमारे पास फालतू रिजर्व पड़ा है, उसको यूटिलाइज करके उसको सीआरआर में कन्वर्ट कर देंगे। सीआरआर क्या है? डेड रिजर्व। किसी को कोमा में भेज देना उसे सीआरआर कहा जाता है। सो इट मीन्स फॉर a reserve which is a good reserve which can be utilized for any purpose has comes to an end, has been transferred to CRR capital redemption reserve, so that it cannot be utilized for any purpose, because CRR can be utilized only for issue of fully paid up bonus shares, and fully paid up bonus shares are also nothing, they are just neutral. They have no benefit. There is no benefit of issuing fully paid up bonus shares to the shareholder. It is just a, you may say, fake assumption that they will be benefited. There is a negligible benefit of it. Due to that reason, CRR, which is a dead reserve, will be used for creating a dead benefit to the public. So this is just a fake working. So for that purpose, we are doing that. Nothing else is there. So what we are doing this thing. We are transferring our free reserves to CRR. One thing. Second, we think that we don't have free reserves, then how we'll do it? We will arrange fresh capital. Fresh shares we may issue. So fresh shares we may issue, which is of different type, not the same type. Whatever shares we are going to buy back, it must not be of the same category. The category must be different. So we may go for the fresh issue. By making a fresh issue equivalent to the amount of your face value of equity shareholders which are going to be buyback, you can go for the redemption. If CRR is not available, fresh reserve is not available, you may go for this. So there are two things. It means creditors' interest should be protected. Exactly, Namarta, can we issue debentures for the purpose of buyback of shares? Never. You can never issue debentures. Debentures cannot be issued for buyback or redemption. Even in redemption, it is not allowed of preference shares or buyback of equity shares. Profit for equity shareholder retained earning fresh free reserve. Exactly, retained earning is free reserve. Free reserve is lower by way of CRR. Exactly, beta, this is right. Hostile means to you have listened that a plane is hijacked by some person and they have hostile the people in that. Hostile means to take over, to control that. So that is called hostile. So you have to satisfy two conditions. One is you will have to arrange cash or cash equivalent. That is very easy and simple. This is to be normally planned in the question. This is normally planned by the examiner. That is planned, already done, given in the question. We need not to do it. Second thing which we have to do is we have to satisfy a equation. What is the equation? Face value of buyback of equity share should be equivalent to CRR plus face value of fresh issue of shares. Note it down. Means if we have to buy back shares whose face value is, we have to buy back 10,000 shares. Face value is 10 rupees. So that means for we need 1 lakh rupees. So we'll check how much free reserves are available with me. So assume मेरे पास general reserve है, that is 20,000 rupees available in our balance sheet. So I'll transfer it to CRR. So CRR is 20,000 plus fresh issue. How much should be the fresh issue? Face value of fresh issue should be 80,000. 1 lakh minus 20,000. So you may get it. Note it down. Another assumption. If we have to calculate number of shares to be issued, then we may do it by this assumption. Number of shares to be issued. $80,000 is the amount divided by, if face value of one share is 10, then we will note it down that 800 shares will be issued. Then 8,000 shares will be issued in this case. Okay, so this will be the concept behind this. Let's take a look of your information, whatever is given in your module. Very important point is there. No buyback of any shares or securities shall be made out of the proceed of an earlier issue of same kind or same kind of other specified securities. Means if equity shares are to buy back, then preference shares will be used, but same kind of equity shares cannot be used for buyback. Means we can't issue equity shares of the same category to buy back another equity share of the same category. It is not allowed. Yes, for equity shares we can issue by preference shares, but we can't issue even debentures. Debentures are not allowed. Now, in this case, other important provisions which are to be kept into mind, that is buyback is authorized by its article. Buyback is to be done only and only if it is authorized by its articles. Articles mean AOA, Articles of Association. And simultaneously a special resolution has been passed in the general meeting, but in certain cases this special resolution is not required. When it is not required, he says the above provision do not apply where the buyback is 10% or less of the paid up equity capital plus free reserves. Means if we have paid up capital worth rupees 1 crores and we have free reserves worth rupees 1 crore, and we are going to buy back 20,000, we are going to buy back 20 lakhs or less, means 1 crore plus 1 crore is 2 crore. So 10% of 2 crore is 20 lakhs. So if we are buying back 20 lakh or less value of equity shares, then he says there's no need of the above provisions to apply. In that case, it may be authorized by a board meeting that is to be done in routine by the directors, or a board resolution without the necessity of its being authorized by the shareholders. Is that clear? So what we are studying, section 68, subsection 2, that no company shall purchase its own shares unless point number 1 is there, buyback is authorized by its article. That is mandatory in all cases. But a special resolution is not mandatory if these all conditions must be satisfied in toto. Means A, B, C, D, all conditions must be satisfied. So first condition is to be satisfied, that is mandatory. Second condition is optional. It may or may not be satisfied. In case 10% or less is to be done, no need of satisfying this condition. Otherwise, it is also mandatory. Then third condition, the buyback must be less than 25% of the total paid up capital and free reserves of the company. Means whenever you have to make buyback, you should have to check it out that how many shares are going to be buyback, how much is the capital to be buyback. If you have to buyback, then we must have to check it must be less than or equal to 25% of the total paid up capital. If it is less than 10%, then special resolution is not required in GM general meeting. But if it is more than 10%, obviously in that case special resolution is required. This is not to be mixed with this. This 10% is not to be not for the practical purpose. For practical purpose, this is required 25% because that is all theoretical, that whether GM meeting is to be used or whether board meeting is to be used. This is all about theoretical part. For practical part, this is not important. For practical part, this is important that the buyback must be equal or less than 25% of the total paid up capital. Means if paid up capital of the company is 100 crores and free reserves of the company is this is the total paid up capital, including equity, preference, whatever it is, because we are talking about paid up capital. And free reserves, whenever we are talking profit and loss account, general reserve, and all other free reserves which are not dedicated for specific purpose, which are not dedicated for a specific purpose. So just assume this is also 100 crores. So it becomes total 200 crores. So 25% of it means 50 crores will be the maximum amount of buyback allowed. Or and the further buyback in any financial year must not exceed 25% of its. Further, the buyback of shares in any financial year must not exceed 25% of its total paid up capital and free reserve. These both have approximately same meaning, not too much difference is there, but major difference is that in any financial year, means in a particular year, that is 2021-22, 2022-23, you can't go for a buyback of more than it is not in the same financial year, sorry. It is not in the same financial because it will be in 21-22. It will be in 22-23. So these are in separate financial years. He says in one financial year, it cannot be more than 25%. But simultaneously, one more condition is there that in any particular, there must be a gap of 1 year between two buybacks. If we are making one buyback and the next buyback must have a gap of 1 year from it. So that is also required. Read it once. Suripal. एक बार पढ़ लो आप इसको, बिकॉज ये काफी इंपॉर्टेंट रहेगा। इसके बेस पर कुछ क्वेश्चंस भी हैं जो हमें करने हैं। अगर ये टफ लगे तो आप लोगों को घबराने की जरूरत नहीं है, बिकॉज अभी ये नहीं आने वाला। नहीं आगे तो ये घबराने वाली बात नहीं है अगर ये ना भी समय लगे, वैसे इजी है। देखो सिंपल सी बात कर रहे हैं हम लोग कि हमें 25% से ज्यादा बायबैक नहीं करना किसी भी पर्टिकुलर ईयर में। और दूसरा, बायबैक करने के बाद जो हमारी डेट इक्विटी रेशियो है वो 2:1 से कम नहीं होनी चाहिए। मिनिमम डेट इक्विटी रेशियो मस्ट बी 2:1 or more, not less than that. Ratio of debt owned by the company, secured and unsecured, after such buyback is not more than, sorry, इससे ज्यादा नहीं होनी चाहिए, not more than twice the total of its paid up capital and free reserves. So it should be 2:1 or less, not more than that. So it is also mandatory. Illustration number 2. Come to illustration number 2. If free reserves are not sufficient, we use security premium for buyback. Oh, don't worry. First of all, you must have to write the entries. In that, you will be clear on each and everything. Let's write down the entries. But if you have done reduction of preference shares, then you will easily understand the entries from the illustration also. So better you may write down the entries from the illustration. It will be easy because it will save our time and there is no need of doing that. Same entries will be there just like as we have done in reduction of preference shares. Not too much different. Exactly, Shriram. Here, 1 year gap is not satisfied. Due to that reason, this is not allowed. That I am interested to say. Can you summarize C and D point once? Namartha, don't worry. We will discuss C and D point and even each and everything regarding that when that illustration will come to us. Not obviously we will do a question in that you will understand it practically. Due to that reason, I am not taking it too much seriously. Illustration number 2. Here, share capital is given to you 100 crores. Reserve and surplus is given to you 300 crores. And other information is also given to you. Detail of share capital is given to you. In this, he says there are 12% redeemable preference shares which are worth rupees 75 crores and 25 crores is the value of equity shares. So free reserves are also given to you. That is revenue reserves, because revenue reserves are named as free reserves. Capital reserve is not a free reserve. Revenue reserve is a free reserve. Security premium is used for the purpose of writing over premium on redemption of premium on buyback of equity shares. Yes, it is also utilized for the purpose of creating CRR, but normally we are not using it. We are trying to use it for the purpose of writing of premium on redemption of or buyback of shares. So company redeemed preference shares on 1st of April. It bought back. Yeah, company has redeemed its preference shares. All we know how to treat preference shares. Tell me, in this case, for redemption of preference shares, what you will do? This entry is clear to everyone. Preference share capital to preference share holders to bank, and simultaneously we have to utilize CRR also for this purpose. How much CRR is to be created? We know it very well that we have redeemed our preference shares at its face value because nothing is mentioned. So we have assumed that it has been redeemed at face value. It is to be redeemed at fair face value. Then obviously CRR is to be created from revenue reserve worth rupees 75 crores. This will be transferred to CRR. So two entries are these. There are two entries which are given here. But for that purpose, we must have to check whether cash is available with us or not. That is our requirement. We will check it out. Here already mentioned that sufficient cash is available. There is no problem. Cash means for cash and cash equivalent. So for redemption of preference shares, you will have to transfer this revenue reserve debit to CRR. In the given question, it has been done jointly for both equity shares and preference shares, but I'm interested to do it separately because it will be more easy to understand in that case. So this is the entry. So same concept is for equity shareholders also. Whenever I'm interested to buy back my equity shares that has been mentioned here, we also bought back 50 lakh equity shares of 10 lakh, 10 each at rupees 50 per share. So 50 lakh equity shares are to be buyback at rupees 50 per share. 50 lakh into 10 is the face value of shares to be buyback, 5 crores. 50 lakhs into 40 is the premium on buyback, that is 20 crores. So this is the premium on buyback and this is the face value of buyback. So for this, we have to create CRR. So CRR is required for only face value, not for the premium. So we have to create revenue reserve account debit to CRR 5 crores. For writing of premium, we may use security premium if available. If security premium is not available, then we may use revenue reserves, free reserves debit, any free reserve, profit loss, general reserve, or any other free reserve, whomsoever is available. Free reserves are those reserves which are available for declaration of dividend, which can be distributed as dividend to the equity shareholders, is named as free reserve. These may be dividend distribution fund, which is always available for the distribution of as dividend to the equity shareholders, that may also be utilized. Any other free reserve which is available for declaration of dividend. Normally, it doesn't cover those reserves which have been created from sale of profit, from profit on sale of assets, or from revaluation of assets as free reserve. So here 5 crore will be done in this way. So premium is written off, that is 20 crores. Sorry. So see the entries given to you. Here we are writing the first entry is, what is the first entry? Share buyback account debit to bank. You may write it down with you. Share buyback account debit to bank. This is 25 crore total amount. Now it is to be created. It is to be adjusted with equity share capital and security premium. So our entries are somehow different because this will change the concept of entries. So I would like to write it for you. Equity, when equity shares are to be buyback, equity shares buyback account debit to bank with the total amount. Simultaneously, one more entry is to be passed for this purpose. Equity share capital account debit, premium on buyback debit to equity shares buyback account. This should be the face value. This should be the premium. This should be the total. So these two entries will be there. Third is sale of investment. If any investment is sold, the entry will be banking on debit. To investment. There may be some profit or loss on investment. On sale of investment, loss on sale of investment is to be debited. If there is a profit, it is to be credited. Then we have to create CRR or make fresh issue. For creating CRR, note it down, then I will proceed. Entry is very simple. Free reserves account debit to CRR. Then, if any fresh issue is to be made for buyback, this should be with the equation. Equation is very simple. Face value of buyback should be equal to CRR, which has been already created if there are free reserves, plus face value of fresh issue. So by satisfying this equation, you may get it. And the entry is very simple, as we know, banking on debit to share capital to security payment. And then yesterday we were discussing that you must have the knowledge of a chapter named the share capital. So today we are going nearer here to that chapter only. So maybe concepts will also clear for those who have any doubt in these chapters. Banking on debit to then writing off premium on buyback. That is security premium account debit to premium on buyback. If it is not written from security premium, it may be written from free reserves also. So first preference is security premium, second is free reserves. So these are the entries for this purpose. Have you noted it down? Please tell me. I would like to proceed. Develop preference shareholder capital account debit 75. Very good. Very good. Khushi, it doesn't matter if you will first do the buyback and then pay it, or you may pay it first and then create buyback. These are just the entries, so there's no worry. Like first and second entry may be exchanged with each other. Even first and second entries are can be passed at the end also. There's no problem. In number of books it has been given that it is passed at the end, so we may. There's no problem. We have to create CRR separately, both for the redemption of preference share and buy. Exactly. Everything clear? Done, sir. Very good. So I think this illustration is very well clear to everyone. Illustration number 5. or better we may do some question. It is time is there 3 or 4 minutes. Better we may do a question number 3. That's a better option. Question number 3, practical problem number 3. Practical questions. Question number 3. So KG Limited is there. Balance sheet is given to you. On 1st of April, company announced the buyback of 25% of its equity shares at the rate of rupees 15 per share. For this purpose, they have sold all the investment for rupees 75 lakh. So what will be the entry for sale of investment? Pass it and send it to me. Namrata, you are right. Do one thing, pass the entries fast and send it to me. What will be debited and what will be credited? Time is 1 minute maximum for 5 entries, because this is a work of seconds, not the minutes. So do it fast. Buyback of 25% of its equity share, that will be done later. First of all, sell the investment fast. Investment is sold for rupees 75 lakh. Not getting your entries. बैंक टू इन्वेस्टमेंट नम्रता ने भेजी है, बात नहीं बनी नम्रता, मुझे अमाउंट साथ में चाहिए, अमाउंट भी साथ में चाहिए. बैंक अकाउंट डेबिट 74, इन्वेस्टमेंट अकाउंट क्रेडिटेड 75, लॉस इज 1 lakh. सो दिस इज द एंट्री. वेरी गुड, जिन्होंने भेजा अच्छी बात है. नेक्स्ट एंट्री इज रिगार्डिंग he says we have to buy back 25% of equity shares at rupees 15 per share. So make the entry for buyback. Buyback की एंट्रीज डालेंगे. We must have to check schedule also, notes given to us, because you need not to check capital from here, because here total capital is given, here only equity is not given. This share capital may include capital of equity as well as preference both, so you need not to go for 12 in this way. You have to check the work schedule or notes. There it is given to you that equity share capital is worth rupees 1200 crores. So if it is 1200 crores, 25% is 300 crores. Make it due fast. Send me the entry fast. Fast beta, fast. चाहे पेमेंट की एंट्री पहले भेज दो, चाहे आप दूसरी एंट्री भेज दो, जो आपको अच्छी लगे. We have to pass 2 entries. This is 450 crores. Very good. Equity share capital buyback to bank. Yeah, second entry is also sent by some students. 300 crores. Very good. 150 crores and 450 crores. That is equity share capital premium on buyback to equity share buyback account. Very good. Fast, fast. जल्दी भेजो. So this entry is done, this is done, this is done. Now it is our duty to create CRR or make fresh issue. So check it out. Whether CRR is to be created or fresh issue is to be made. It must be mentioned in the question that fresh issue is to be done. Only then we are going for fresh issue. So check it out. Is that given to you? The company achieved the target of buyback on 5th of April. On 30th of April, the company issued one fully paid up shares by way of bonus shares. So bonus share is somehow different. We are not going to merge it with this. So here, whether CRR is to be created or fresh issue is to be made, that is not mentioned. So tell me how you will do it, how much amount of CRR is to be created or how much amount of buyback is to be made. Very good. Very good. Here buyback is not mentioned. Here fresh issue is not mentioned. So you will create a buyback, create a CRR, sorry. For creating CRR, we should have sufficient reserves with us, free reserves. Here free reserves worth rupees 170 crores is available with us. 170 crores. Out of this 170 crore, 1 crore is already utilized, minus 1. Because 1 crore loss is there, which has been suffered by us due to the reason of sale of investments at loss. So 169 is available. How much is required to us? We required only 30 crores. So for that purpose, we will pass an entry. Free reserves to CRR, that is profit or loss account. Here it will be profit or loss account. So it is 300 crores. So check from where you will arrange 300 crores. So tell me fast, please. So check it out how much reserves are available with you fast, beta. This is general reserve and CRR. Yes, exactly. CRR. No, Aditi. This CRR cannot be used for the purpose of buyback. This CRR meant for a person which has already been sent into coma. So this is a dead reserve, already an old dead reserve. We'll have to create a new dead reserve for the purpose of redemption. Existing CRR cannot be utilized for the purpose of buyback or redemption of preferentials both. Let it be very much clear. So you have only the general reserve and profit or loss account available with you for creating this. So you will have to transfer 265 crore is this that will be utilized for the purpose of creating CRR. This will be transferred to CRR. Remaining you may get it from here minus 35. You may take it from here CRR. So entry is GR account debit, general reserve account debit. That is here. General reserve account debit 265. Profit loss account debit 35 to CRR 300 crores. Okay. There is loss on investment, profit on investment. Okay, 1 crore. Sorry. Here maybe it was profit, you know. On sale of investment, there was a profit because bank it has been sold for 75. Okay, but I think remaining students are sleeping or awaken. अरे बाकी भी बताया करो भी कोई लिखने में कहीं गलती हो जाए तो गड़बड़ हो जाए बता तो दिया करो बाकी तो बोलते ही नहीं कहीं एक स्टूडेंट ने बताया कि यहाँ पर सर गलती हो गई है कोई ऐसी दिक्कत नहीं बता दिया करो मुझे उसमें कुछ फीलिंग नहीं आती कि हाँ जी भी आपने मुझे बताया तो मुझे बुरा लग रहा है बल्कि इससे आपकी जागरूकता का पता लगता है आपकी जो अटेंडेंस है जो अटेंशन है उसका पता लगता है कि आप अटेंटिव हो कि नहीं हो सो आई थिंक दिस इज क्लियर आर माई आंसर रीचिंग टू यू सर खुशी एग्जैक्टली बेटा if your answer from general reserve you can create 265 already mentioned you we need 300 crores so 150 crore will be arranged from security premium whether security premium is available to us check it out 175 crores of security premium is available to us so we may do one thing we may use security premium for this purpose so to write off premium on buyback use security premium account debit to premium on buyback rupees 150 crores CRR cannot be used for buyback of shares amount in CRR can be used exactly beta exactly everyone has understood each and everything having any doubt just tell me then for issue of bonus shares I doesn't know that chapter is covered earlier or not because bonus share have some different type of concepts I may just give you an entry what is the entry CRR account debit to bonus to equity shareholders remaining you may do it in the chapter whatever the chapter is there so this entry is to be passed this is an additional entry it may come into your exam there is no problem but for that purpose right and bonus share chapter is there that you have to cover maybe that is not yet covered in your syllabus yet so when it will be covered you will understand this entry there is no worry because if we will cover we will have to cover the complete chapter now I sent the correct entry at the beginning itself for sale of investment there is no response okay good very good Pooja you are right that you have sent me the answer good very good I have not seen that moreover there is a huge lag by the time you are looking at your queries basically when I am solving a question then there may be a chance that one or two inquiries may be go up and down because I will have to check it. I have to concentrate on laptop. I have to concentrate on board. I have to concentrate on mobile. I have to concentrate on camera. I have to concentrate on notes. Everything I have to concentrate, beta. So Pooja, it is not an easy job. The person who is working may better know. I am trying to cover the doubts of each and every student, and preferably those doubts are to be covered which are required to students, which will be helpful to the students. You are sending me the answer. That is good. Sending the answer is beneficial for you, not for me. So send the answer with full enthusiasm. There's a requirement. There's no problem. You must have to send it. But don't be discouraged if I'm not responding to your answers. Because answers are sent by you for your purpose only. Okay. So you must be attentive in the class. Kunal Joshi, any other statutory reserve like export profit reserve is also not to be used, right? Exactly right. Are my answer reaching to you, Hitesh? Answer of every student is reaching to me. There's no problem. Miss Aditi, CRR, debit, whatever it is. Okay. So, are you clear on each and every concept? So, do all the questions, all the illustration, whatever you can do, except those where you will have to solve it by way of testing, 25% testing like that, sheer outstanding test like that. So we will cover that in the next lecture. There's no problem. So I suggest you to do, let's check it out, which question you can easily do. I may help you to understand that. Starting with the illustration, what you can do easily. study with the practical problems. So let's understand this. Which practical problems you can do easily? Don't do illustration number. Don't do practical problem number 1. That will be difficult. We haven't covered its concept yet. Practical problem number 2 is already done. 3 is also not to be done. So practical problem only 1 which we have to do, that we have already done. Now come to illustrations. Illustration number 1 you may do. There's no problem. You can easily do it. Second we have already done. Illustration number 3rd. You may do. Illustration number 3rd you may do. Illustration number 4th. You may do this also. But don't do the illustrations by reading it. Just read the illustration and do it on your copy. Solve it by yourself. Don't do illustration number 5 because that concept is not yet covered. And there is some error in the solution also. So due to that reason, we will cover it later. Illustration number 6, no need of doing it because this concept is also pending. A big major concept is pending. Due to that reason, I have left few questions for you. You need not to do that. Few have to be done. So I have already mentioned you few illustrations are there, 1 to 5, which you have to do. Remaining illustrations and remaining questions, we will do it later on. Our next lecture will be on Wednesday. That is on 17th of August. Monday will be the holiday for Independence Day. Happy Independence Day to all of you. Do more and more questions from your 10-year also, if such type of questions are available. Otherwise, after covering on 17th, I'll give you some questions which you may do. And later on Sunday, we will take doubts of all those. So there's no worry. Okay then. Thank you very much. Our session is over, sir.